Well, hello members, it is March 3rd. This is the report for March 1st, and it's going to be a shorter presentation than usual, primarily because this market still is trying to move higher. We've got gains again, NASDAQ index slightly on the S&P, flat on the small caps, which have been the leader. That's a little bit of an indication that something might happen. You also saw bonds and gold sell off, and elsewhere pretty flat. Big gains year to date for the most part, and still gains for the most part in all sectors of the market, indexes as well. The philosophical and technical picture, actually more of it technical than philosophical, a little bit of fundamentals in here too. There's no sense focusing on some technical setup that tells us that this market's going to crash, right? If I pull the chart up, what you're going to see is a market that is unwilling to give it up, right? Not only did we flatten out last week, but held up here, right, at this flattened area. Very tight range most of the week, but by the end of the week, what does it do? It breaks the swing point high that you see over here and actually moves to a new closing high off this bottom. Now you can see, and I showed this in one of the missives as we were going through the week. You can see this flattening out, right? This steep uptrend is starting to flatten out, but so far it's the sort of flatten that you want. I actually said that the best case for this market would be if it was to move back into this area and hold, and so far it has. I mean, that is the best case. In other words, you just go across in time and eventually get your correction via time instead of price, right? That's the best case. Worst case is you get some sort of a retrace, that goes deep. Odds of that are not very good to start with here, because there's so much participation across all the indexes, all the sectors, that for the most part, unless you get some exogenous event out of the blue, this thing's probably going to hold up for now. Now, having said that, right, there are some things that do look different. In other words, if I just look here at the sectors, jumping to this, you can see you got a lot more red here than you've had before, right? And so you've got some of that churning that's going on underneath. But as long as you get the weighted sectors, like here on energy, not so much energy, but technicals, the technology and the financials, right, those two holding up, the market's going to hold up. And that's what's happening so far. You're getting that rotation, but you're not getting much in terms of any kind of a price pullback. Elsewhere, there's a few other things. I'm not going to go through all these, but if I flip through the country ETFs, which I do each week, those ETFs are certainly pulling back in a large number. Probably 60-70% of them had retraces last week, and so country ETFs are showing weakness. Another area that's showing weakness is the bonds. Here's a broad chart of the aggregate investment grade bonds, and you can see a clear push back to the downside last week off of this shall we say this ETF, right? And that's a sign of something potentially taking place, and that's after a large set of gains all the way back to that December period. In the larger context of things, you can see that we had a heck of a run, and now we got one big dip down. Is it going to turn into something larger? We know there's supply up here. Is it going to turn into something or not? Right now you can't say, right? You just got a big push back down on a daily time frame, 3 days, 4 days in a row. You're coming into a lot of either short covering or actual desired demand, right? And that's this green area that you see here. So we'll just have to see how it behaves as it gets back into an area where it should get bought. If it doesn't, then something bigger is going on, but we don't know that yet. And given how strong this market has been, I hate to jump to that conclusion. Another thing that's very interesting to me is when you look at the earnings changes, right, that have taken place, they were massive this time around. In other words, we're not expecting earnings or we are expecting earnings to decline precipitously, right? Much more than they have on average anytime, because they always, after earnings, the way the Wall Street works is they set your expectations here, right? And then they lower them and lower them and lower them until you get to the actual earnings. Earnings come out, and what do? They all beat. 70% of them beat. They get over whatever that bar is that gets set lower and lower into earnings. And that's what all of these are. You can see they all get lowered. But these huge ones, right? When you get these huge ones, then that's something that catches your eye. When was that last? 2015, 2016. What happened back then? Well, if you go back and you look, maybe you can remember back then, but if you go back and take a look at that period of time, first quarter 2015, here's 2016, 2015. If you look at that period, that is when you had, and let me just draw it here, that is when you had this big range develop, right, and persist for about a year and a half. And so I'm really curious if this is going to be a range, right? Are we going to see some sort of a range develop here, which is kind of what I thought would happen, but so far has not taken place. And the way that would take place is for this bearish retest regen to actually hold prices, right? And you get some sort of a rollover decline that extends for some period of time. And that's really what you should be watching for in this market at this point in time. What's the bottom line here? You can always point to things that justify your beliefs, and it's dangerous to do that. You really don't want to cherry pick the data to support whatever it is that you believe. You want to try to be objective as you can. And right now, as much as I desire this market to trade sideways to down, I don't want to cherry pick the data as much and say, oh, that's what's going to happen. Right now, we have nothing, absolutely nothing to tell us that's going to happen. We've seen little indications here and there. I've seized upon those, and I've probably been guilty of doing this. But that last supply line, right, after this 450-point push up, that last supply line that's up here, it's 2836 on the monthly. Right? It's hard to imagine we're just going to cut through that. It's possible, but it's hard to imagine. If we do, I'll just tip my hat and say, wow, that was something else. But until then, I have to remain skeptical that it will take place. Turning our attention to the fundamental data. The politics, oh my gosh, I don't even want to go to there. Every week there's politics. There's always something there. We do know, and I didn't note it here, but we do know the Mueller report is going to come out soon. Whether it does anything or not, I have no idea. We have so many investigations going on with the administration. Something like 16 to 18, I think, is the count. They may turn into something, who knows, but that's going to take a long time. And even if they do, the thing that could happen quickly would be the Mueller investigation that actually lays out the groundwork that there is wrongdoing, prosecutorial wrongdoing at the highest levels, but who knows what that's going to show, and so you can't assume that's going to happen. On the fundamental political side, though, on the fundamental side, right, it's been 6 months now. The data in most cases, here's a stronger than expected, but everything else weaker than expected. And that's why these central bankers have pushed out something to the tune of $500 billion in a matter of 2 months and changed their entire outlooks because things are worse than they look. Next week, you got all this data. There's quite a bit. You got the two central banks, in particular the ECB, and then you've got the employment situation. There is a possibility that if the employment numbers tick up, that you're going to see it trigger some early recession indicators. And so we'll be watching that to see what happens. Beige book comes out. These are the most important. These others a little less so important because they're more or less discounted already and probably don't surprise. What's the expectations? Right now, it's hard for me to say this, but it actually looks like this thing's going to trade a little bit higher this week. Best case would be to just blow out that 28.35 number. Worst case would just push back to 27.50 straight away. It looks to me like this 2800, now that they got over it, they're going to try and hold it, and so I would expect that to take place. Last week the most likely case was the case that came through. At least it was the closest to the accurate case. I did not list all of those setups from last week. You can go to last week's notes if you want and take a look at them. Most of them were starting to see pullbacks, which I indicated earlier. This week, what do we got? IHI has broken out. Of course, the IHI is the medical devices. You can see here, big volume comes in end of the week. If you look at it on a weekly, breaks out. If you look at it on a monthly, it's moving to all-time highs. This has been and continues to be one of the strongest sectors. I've mentioned it many times before. Still one to focus on. Another one that's extremely strong has been and continues to be is the Sky, which is the global computing. It's all of the big servers that are rented out, like the Amazon AMS, I think is, or AWS, I think is what it's called. Here's a cloud computing index fund. So you can see how it, again, just drives and drives volume on Friday on options expiration. Here's the brand new highs on the weekly and new highs on the monthly. So extremely strong area if you're looking for strength. If I looked for weakness, I'd probably look at this uranium. There's not a lot of places to look for weakness in this market. The uranium has been one area that has suffered for a very long period of time. You can see the weakness coming into it last week. Again, on the weekly, you can see it trying to break higher, fails here at the swing point high, and has rolled over since. And so if I'm looking for a place, I'm looking for something that's weak that can't move higher, and this one looks that way. Here it is on a long-term time frame, and you can see just how weak it is. If it were to break these lows, right, take out these lows, then there would be nothing to stop it again from going even lower. So this is an area that still looks extremely weak to me. So that's it for this week. I will, as always, am here to take questions, answer anything you may have. Don't always get to it immediately, so hopefully you're not asking me, should I make this trade kind of thing, but general questions, philosophical questions, dealing with neoclassical TA, I'm always here to help and try to help you. So that's it for this week. Have yourself a great one. I'll see you next time.